What if I told you that the real power in the world isn't held by presidents or politicians? What if the decisions that affect your paycheck, your mortgage, your ability to buy groceries are actually being made in secret boardrooms by people you've never heard of? Look at this map of the world, and I want you to understand something fundamental. There's an invisible architecture of control that shapes every economy on this planet, and it all flows through one institution: central banks. And here's the crazy part. Most people have absolutely no idea how much influence they actually have. Let's start with the basics. What exactly is a central bank? Every country needs a bank that manages the nation's money supply. In the United States, that's the Federal Reserve. In Europe, it's the European Central Bank. In Japan, it's the Bank of Japan. These institutions are technically private corporations, but they operate with government backing and legal authority. They're not like your local bank where you deposit your paycheck. They're the bank for the banks. They're the ultimate authority over the entire financial system. Now here is the thing that blows most people's minds. Central banks have the power to create money. Not print it, create it. They can literally decide that more money exists in the economy, and it does. When the Federal Reserve announces they're lowering interest rates or buying government bonds, they're essentially creating trillions of dollars that didn't exist before. This is called monetary policy, and it's the most powerful economic tool on the planet. After the 2008 financial crisis, the Federal Reserve implemented quantitative easing. They created over $4 trillion and used it to buy government bonds and mortgage-backed securities. They didn't have this money sitting in a vault somewhere. They literally created it electronically. And this decision, made by unelected officials, fundamentally reshaped the global economy. Asset prices soared, inequality exploded, the wealth gap widened dramatically, and most people didn't even know it was happening. But here's what makes this even more interesting. Central banks don't just influence their own countries, they influence the entire world. When the Federal Reserve raises interest rates, it sends shockwaves through emerging markets. When the European Central Bank changes its policy, it affects economies from Africa to Asia. The dollar is the world's reserve currency, which means every major transaction on the planet is denominated in dollars. And who controls the dollar? The Federal Reserve. So in a very real sense, the Federal Reserve controls the global financial system. Think about what this means. Your ability to get a loan, the interest rate you pay on your mortgage, the value of your savings, the stability of your job. All of it is influenced by decisions made by central banks. And these decisions are made behind closed doors, with minimal transparency and almost no public input. The Federal Reserve doesn't answer to you, it answers to Congress, but Congress rarely challenges it. It's an institution with almost unlimited power and almost no accountability. Now let's talk about interest rates, because this is where central bank control becomes really obvious. Interest rates are the price of money. When central banks raise interest rates, borrowing becomes more expensive. People and businesses borrow less, the economy slows down, inflation comes down. When they lower interest rates, borrowing becomes cheaper. People and businesses borrow more. The economy speeds up, inflation goes up. By controlling interest rates, central banks essentially control the entire pace of economic activity. But here's the problem. This power is incredibly easy to abuse.
If you lower interest rates too much, you create asset bubbles. People borrow money to buy stocks and real estate, driving prices to unrealistic levels. When those bubbles burst, it causes massive economic damage. If you raise interest rates too much, you trigger recessions and unemployment. Either way, regular people suffer the consequences. Yet, the central bankers who made these decisions face almost no consequences themselves. The Federal Reserve was created in 1913, and here's something fascinating. It's technically a private institution. The 12 regional Federal Reserve banks are actually owned by member banks, but it operates with government authority and backing. It's this weird hybrid between public and private, and that ambiguity is part of what allows it to operate with so little oversight. The Federal Reserve has what's called the dual mandate. It's supposed to maintain price stability and maximize employment. But here's the thing. These two goals often conflict. Sometimes, you need to raise interest rates to fight inflation, but that causes unemployment.
Sometimes you need to lower interest rates to boost employment, but that causes inflation. So the Federal Reserve is constantly making trade-offs, and those trade-offs benefit some people while hurting others. Now let's zoom out across the global financial system to understand how central banks coordinate with each other. Because here's what's really powerful. Central banks work together. They're constantly communicating. They share information. They coordinate policy. When one major central bank changes its strategy, others follow. This creates a kind of global monetary policy that's coordinated at the highest levels, completely outside of democratic processes. During the 2008 financial crisis, central banks around the world coordinated massive stimulus programs. They lowered interest rates to near zero. They created trillions of dollars in new money. They did whatever it took to prevent the financial system from collapsing. And you know what? It worked. But it also created massive inequality. It bailed out the banks and the wealthy people who owned stocks. It didn't help the millions of people who lost their homes. It didn't help workers who lost their jobs. The central banks chose to protect the financial system rather than protect regular people. If you're starting to see how this system works, make sure you're subscribed, because we're about to get into the really interesting part about how this affects you directly. And this is where it gets really interesting. Central banks have a bias toward protecting the financial system and the wealthy. Why? Because that's who they interact with. The Federal Reserve meets with bankers and financial executives constantly. They have a revolving door between the Federal Reserve and Wall Street. Janet Yellen, a former Federal Reserve chair, went on to become Treasury Secretary. Jerome Powell, the current Federal Reserve chair, came from a private equity firm. These people understand the world from the perspective of finance and wealth. They're not thinking about how their decisions affect ordinary workers and families. When central banks keep interest rates low, it's supposed to encourage borrowing and spending. But what actually happens? Asset prices go up, stock prices rise, real estate prices rise, home prices skyrocket. If you already own assets, you become wealthier. If you don't own assets, you get priced out. So low interest rates, which are supposed to help everyone, actually increase inequality. And this has been happening for decades. Since the 1980s, central banks have generally kept interest rates low, which is one of the major reasons why wealth inequality has exploded. The mechanics of this are actually pretty simple. When interest rates are low, investors look for higher returns. They invest in stocks, they invest in real estate, they invest in alternative assets. This drives prices up. People who already own stocks and real estate become wealthier. People who don't own these assets get left behind. So central bank policy, which is supposed to be neutral and fair, actually systematically benefits the wealthy and hurts everyone else. Here's another mechanism of control that most people don't understand: the money supply. Central banks control how much money exists in the economy. When they want to stimulate the economy, they increase the money supply. When they want to cool it down, they decrease the money supply. But here's the thing: the money supply doesn't just affect inflation and economic growth. It affects everything. It affects the value of your savings. It affects your purchasing power. It affects your ability to plan for the future. Imagine you work hard, save money, and put it in a savings account earning 1% interest. But the central bank is creating money at a rate of 3% per year. What's happening? Your savings are losing value. You're getting poorer in real terms, even though you're not spending anything. The central bank's decision to create money is essentially stealing your wealth. This is called inflation, and it's one of the most insidious ways that central banks control the population. They're gradually eroding the purchasing power of your money. And most people don't even realize it's happening. Now I want you to really think about what this means. Central banks have the power to create money. They have the power to set interest rates. They have the power to influence inflation. They have the power to determine who gets credit and who doesn't. They have the power to bail out financial institutions during crises. And they make all of these decisions with almost no democratic input. They're not elected. They're not directly accountable to the public. They operate in secret. And their decisions affect billions of people around the world. This is power on a scale that most people can't even comprehend. A president can only serve 2 terms. A Congress member can be voted out. but a Federal Reserve Chair can shape the economy for decades. They can make decisions that affect your life, your family's life, and your children's lives. And there's almost nothing you can do about it. But here's where I want to shift your perspective. Understanding this system isn't about feeling powerless. It's about understanding the game so you can play it better. Once you understand how central banks work, you can make smarter decisions about your money. You can understand why certain assets go up in value. You can understand why certain policies are implemented. You can understand the incentives and the motivations behind the decisions that shape your world. When central banks are creating money and keeping interest rates low, asset prices tend to go up. This is a good time to own stocks, real estate, and other assets. This is not a good time to hold cash. When central banks are tightening policy and raising interest rates, asset prices tend to go down. This is a good time to hold cash and prepare to buy assets at lower prices. Inflation erodes the purchasing power of money, so you need to own assets that protect you from inflation. Understanding central bank power should motivate you to think about what kind of economy and society you want to live in. Do you want to live in a world where unelected officials have the power to create money and reshape the economy? Do you want to live in a world where the wealthy are systematically protected and the poor are systematically disadvantaged? Or do you want something different? Historically, central banks were created to prevent financial crises and provide stability. And in some ways, they've succeeded. We don't have the kind of banking panics that happened in the 1800s. But they've also created new problems. They've created moral hazard, where banks take excessive risks, knowing they'll be bailed out. They've created inequality, where the wealthy benefit from monetary stimulus, while the poor suffer from inflation. They've created a system where a small group of unelected officials have enormous power over the entire economy. So what's the solution? That's complicated, and reasonable people disagree. Some think we should abolish central banks entirely and return to a gold standard. Others think we should keep central banks, but make them more accountable and transparent. Others think we should use central bank power more aggressively to address inequality and climate change. But whatever the solution is, it starts with understanding the problem. Central banks have enormous power, and most people don't understand how they use it. Now that you understand this, you're ahead of 99% of people. You see the invisible architecture of control. You understand the mechanisms. You understand what's really happening behind the scenes. If you found this valuable, please hit that subscribe button. And if you want to understand more about hidden systems of power, check out the video we've linked right here. Thanks for watching, and I'll see you in the next one.